Tamikaze here with episode 2 of the YouTube educational series. What we're looking for in this video is how to draw a support and resistance line. So typically when you're looking to make a trade, you want to know what a good entry point is. If you learn nothing else, please learn support and resistance lines. What I first do when I'm looking at a stock, and generally once you do the beginning work, it's a lot easier to do the ending work. So first of all, what you want to do is start from the daily. You can go back monthly, but the daily should suffice. What you're looking for is finding the bottoms that connect and the tops that connect in its simplest form. So from the daily, what I like to do is green is your bullish lines and red is green is your resistance lines. So if it gets over your resistance lines, that's a very bullish move / it's going to go up move. And red is the opposite. So let's start with a red line here. And what we're looking for is to connect the bottom here with as many lines as possible. And generally what you're going to want to do is, with the daily, it's okay to go with the wicks. As you get closer up, you probably want to go more with the bodies, and we'll get into that in a second. So what we're wondering here is how come we didn't go with these outliers here, and it's just because they are outliers. So in general, you're getting 1, 2, 3, 4, 5, 6 points, where with another line, you might only be getting 3 or even 2. And for me, those are outliers and don't hold strong correlations until we get below this one. So because we're not below this one, there's no point to really drawing those. What we're really trying to do is see if we're in a channel. So let's go and let's look at the other ones. So we're clearly in an uptrend right here. Let's draw our uptrend lines. So what we're looking to do here is connect all these points here. And what we're also looking to do is sometimes resistance lines can become support lines. So as we zoom in here, we can see that we had a nice bounce there, a bounce there, and we had some other bounces here. So what you're trying to do is just establish patterns and connect as many points as possible in the daily. So the next one I will go to is the hourly. So now that I have my 2 daily ones there, I'm going to try to find some more on the hourly. And now this is more of what we're looking at this year. So those are all-time patterns. And now we're looking at, and we want to probably correct these if we have to. So because this one, we want to connect there. There we go. I want to get those as close as possible. So now that's a little bit better. So now what we're looking to do is find some of our patterns that are shaping up this year. So if we see some strong correlations, we'll see that. Typically what I like to do is high to high on the year, so I can see what my high points are. So this will be basically all-time high points. This will be a very hard line to break. What we're also looking to do is your most recent ones. So this would be your most recent high to high. So this would be a very bullish sign if we got over this. And then you're looking to find your low to lows, really. So your red lines, your support lines. So what are good support lines that we can find here? So we see a line here, but we're not sure on that. So we got to go to our next support line and connect that basically with as many points as possible. So it looks like we have a nice support here, or 3-point support. So have we broken through that? Yes, we have. But that doesn't mean that's necessarily a bad line to have. We can try to find our next support line as well. Which looks to be potentially this line right here. So a couple things. What you're looking to do, like I said, is combine as many points as possible. And those don't necessarily all have to be low points. Sometimes they're high points, because a lot of times old high points will become new low points. And that's basically just stating that we're ready to go up more if we're bouncing off the low points. So when resistance becomes support, that is a very bullish thing. And we're going to get into that later in the series when we look at pennants and flags and other candlestick patterns that really are going to help this make more sense. But what we first want to do is just for simplicity, get our support and resistance lines. So we have a couple support and resistance lines in there now that we feel comfortable with. We can now go into more of a day trade / swing trade mode where we're going to go in the 15 minutes and we're going to chart some lines here. So I just got pulled up here is the S&P 500 ticker SPY ETF. So we're just going to, again, we're going to do our, looks like we got a 3-point trend here. We're going to turn that green. So again, it's okay to have the outliers. So these are called fake outs. You'd rather have multiple points. So 1, 2, 3, 4 instead of 2 points. 4 points is stronger than 2 points. Always remember that. And then what we're looking for over here is another support line. So this would have been a red line here. So you can clearly see we had a pattern here. And what we would have gone to later in the series is how this should have been a handle right here, but this broke series, and now we're in a major sell-off. So that's something that we're going to get into later, but I don't want to get into now. So now we're just looking for the extremes. So what are the extremes? So I'm just trying to connect as many points as possible. Looks like according to these, we are aiming down here. And one of the things is, and what I like to do when I was first starting learning is you can trade off of just support and resistance lines. Just by trading these, what you're looking for is just the breakouts of over. So basically your red lines are your short lines or your put option lines. So if you're just trading stock, you could go short here. And if you're just trading options, you could buy a put if it broke below this red line, and the same thing for the green lines. If it breaks over the green line, that is your confirmation that it's time to go long, and you would buy the stock, or you could buy a call option. If you're watching this series, I hope you know what these are. This is just for technical analysis, but I just wanted to go quick into support and resistance lines, trying to make it as simple as possible. You're just trying to connect as many points on the bottom, as many points on the top. There's a lot more to go into as we get into the series, but those are the simplest rules for that. And as you get down in the nitty gritty, you could even go a little bit farther with the 5-minute, and you could do some quicker ones. So if you wanted to say you wanted to get a very good entry for you want to go base to base, you can do wick to wick. It's perfectly fine. And I used to do wick to wick, but what I have found, the more that I chart, that the base of the candles, the thick point of the candles, is more reliable. So there would be your entry point for this is if tomorrow we're below this red point, you could take a short position, and then if it breaks over this green point, you would take a long position. So you can see here you have your short and long positions for your entry points if you wanted to make a position on this. And that's really the simplicity of the trend lines, is it's just trying to dumb it down in its simplest, rawest form on day trading and swing trading. So if you're going to be doing day trading, I would definitely recommend using a 5-minute or 15-minute. And then for a swing trade, I would use the 15-minute, 30, or 1 hour. So thank you. This is episode 2, quick resistance and support lines. And I hope you all have a wonderful day.